Tommy, thanks for joining us. Good to see your face.
Of course. How are you? Good to see you.
Oh, good. Today we're here to talk about some really important information. We've got Tommy. He is with Prime Corporate Services, and Tommy has been, Tommy, an entrepreneur your whole life, and you're president over at Prime Corporate Services. Is that accurate?
Yep, correct. Yeah, we started Prime back in 2012. So there was 4 of us when we first started, and we've grown the company over the last 12 years. We've got 450 employees, and we focus on entity structure, business credit development, estate planning, trust, wills, living wills, power of attorneys. And we do a ton of tax preparation, tax filing, and tax strategy, which is a lot of what I want to talk about today. So
lots of people in here, you guys. Let's just kick this off. Tommy, I'm going to turn the time over to you and let you share your screen.
Awesome. Thank you. Thank you everyone for being here as well. I have got such a soft spot for door to door. 1, because I've done it. And 2, I know how difficult it can be. Yes. And all this stuff really hits home. The reason the reason Prime Corporate Services really came about was we were helping early stage entrepreneurs or solopreneurs with how to save money in taxes. And as we've grown and as we've evolved, all of you know that you're working very hard to keep more of that money that you're already generating. So plan, profit, protect your business. And it's not what you make, it's what you keep. One of the big challenges that I want you to think about if you're not already doing this, if you at the very least break your year up into calendar quarters. So January, February, March, quarter 1, April, May, June, quarter 2. What's beautiful about us having this call right now is we're coming into the 4th quarter. So some of you may have already hired a bookkeeper. Some of you maybe use one designated credit card. Some of you are just guessing at the end of the year. No matter what your situation is, I do challenge all of you, whether you download QuickBooks, the more that you can get familiar with your dollars and your profit and the loss, the better. Because I promise no one cares about your money more than you do. I'm not going to act like I do. I love when financial planners, Tommy, let me manage your money. I only make money if you make money. Are you going to lose money if I lose money? I don't think so, right? So the more that you understand, if right now you understand how much money you've generated and how much money you've invested or spent that ties back to your business, it gives you a very simple math problem on what you can do to invest those dollars into your future, okay? I currently own 8 different companies. I own 77 doors of real estate. 62 of them I have purchased in either November or December. And I share that with you because if I didn't understand what we're going to talk about today, I might be living under a bridge. I don't know. But whether it's real estate, whether it's a vehicle, whether it's putting money into marketing, buying a new computer, laptop, iWatch, whatever it may be, how can you connect those expenses back to your business so that you are in control of investing into your future? Okay. Go ahead.
I'll just add too, I think this is kind of like something guys are, maybe sales reps, you guys are nervous to talk about or to get help with, or, maybe you haven't been setting aside money the way that you should have. And we're coming up on the end of the year, which is why we've selected this topic at this perfect time. So hopefully you can get some stuff out of that. But I want you guys to know that Tommy has seen it all. So there's nothing you can shock him by. Don't be embarrassed. You've got to look to the experts to get that help that you need, and Tommy's the guy.
We've set up over 170,000 businesses. And I talked to a guy just yesterday that was 6 years behind on their taxes, and they made over $1 million a year each year. So do not be embarrassed. Do not be ashamed. It's not going anywhere. But the more that you are familiar with your numbers, the easier it is to create passive income moving forward, diversify, better your financial situation as a whole. So thank you for that. I'm not a CPA or an attorney. I've got tax attorney next door in my office right here. We've got 120 accountants. I'm going to talk to you today as an investor and as an entrepreneur. If any of you need help on any of this, the accountants, the attorneys, the professionals, They will be doing the work. It won't be me. I like giving these presentations. I love entrepreneurship. And one of my favorite things in the world is taking a complicated question and forcing our head attorney and our head CPA to find common ground on what is best for the entrepreneur. So this is going to come directly from a lot of mistakes that I've made and a lot of wins that we've had as well, and hopefully give you some really solid takeaways. I'm sure all of you have heard about the recent tax code change, the one big beautiful bill. And I kind of joke, like, I don't care if you're Republican, Democrat, speak entrepreneur, because it's expensive to run campaigns. And no matter your political affiliation, the tax code oftentimes benefits self-employed individuals just like yourself. So the tax code is over 70,000 pages. It doesn't mean you have to buy a Range Rover, a G-Wagon, or an Escalade every year to just lower your tax liability. Let's find areas of the tax code that truly align with your goals so that you can better your financial situation. Okay. So for today's key points, and I would love, if you don't mind, pull up the chat for me if you would. I want to know which one of these you would get the most out of, on where I should spend a little bit more time. Number one, different types of entities, LLCs, S Corps, C Corps, holding companies. What is best for you and why? Number two, tax deductions, how they work, what they qualify for. If anyone's seen Schitt's Creek on Netflix, when David tells his dad, "Don't worry, Dad, it's a tax deduction." And he's like, "That's not how it works." Have you seen the show? Do you know what I'm talking about?
I love that show.
We don't want any moments like that with this group. Let's make sure we know what is and isn't deductible and what it means. What's that?
Be educated.
Yes.
For sure. No messing around, no more jokes. We're going to know.
Number three, asset protection and generational wealth. And what I mean by that is, it's not about where you are right now. It's where you're going to be in 1 year, 5 year, 10 year, and beyond. And giving yourself that blueprint. A lot of you being door to door, like I'm a sales guy too. So I can really relate with, like, I live so in the moment that it's almost like to a fault, right? When I'm leaving and my wife's like, "What are you going to do for lunch? What should we do for dinner?" I'm like, I cannot think that far in advance. And I'm assuming a lot of you are that way. Driven salespeople oftentimes are. So if you can have a little bit of a game plan, or have a team that can assist you with some of this stuff, if you implement one tax strategy that I talk about today, it'll save you a ton of money, right? So just making sure that you have that in mind. Number four, personal credit versus business credit, and how you can utilize a separate credit profile through your business, as opposed to always having to leverage personal funds or personal credit. Camera keeps creeping over here. All of it, honestly, 2, 3, 4. Thank you. Anyone else in the chat? 1, 2, 3, or 4. I know tax time's coming up, so I am going to go over some different tax strategies. But anything else that anyone wants to make sure that I cover? If not, we'll obviously leave it for some additional Q&A as well. All right, starting with business structure. Hopefully all of you at the very least have an LLC. One of the things, for those of you that are leaders within your organization, for those of you that are doing a lot of recruiting, I think one of the areas that a lot of door-to-door companies or self-employed companies in general fall short is providing education for their reps. Because being 1099 can scare some people, but it is the greatest blessing if you understand how much you can utilize it from a tax deductible standpoint. And the more that you do a lot of what we're going to talk about today, the easier it is to teach when you're recruiting as well. So I don't recommend anyone have some sort of informal sole proprietorship, general partnership, or just operating under your name. Having an LLC shows the intent. You're a business owner, the intention's to generate income, and you can still take and utilize deductions. Once you're generating usually $20,000 to $40,000 or more, which I'm sure all of you are there, making sure that you have the LLC that's taxed as an S corporation or having an S corporation oftentimes is a massive benefit. So write that down. If you have an LLC, verify if it's an S corp election or if you benefit from an S corp election. The reason for that is S corps allow you to pay yourself a salary or a distribution, but it also allows you to avoid half of your self-employment tax, which is Medicare, Social Security, ends up saving you about 7%. So there's someone on this call, I'm sure, that knock door to door, you make 100 grand. If you make that one change throughout the year, that is likely going to be probably $7,000 back in your pocket. So that's time well spent on this call for any of you that are in that situation. Okay. Once you have the business entity, open up the separate business bank account. And as I mentioned previously, please track those expenses. Okay. One of the things that we found, so last year we filed over 50,000 tax forms, and I had our accountants and our CPAs collect a bunch of different data points on why some people save more money on taxes than others. The number one reason, which resulted in $9,300 a year, was our clients that track their expenses saved the average of $9,300. So you don't remember what you had for lunch last Tuesday. You're not going to remember if it was business related a month from now. If you can take the guesswork out of it, if you were like me when I was knocking doors, you're just going through bank statements and saying, yeah, half of that was probably business meals, and I think some of that was marketing expense, but you're likely missing a lot of the deductions that connect and tie back to what are truly business related expenses. Okay. If when you're spending $1, you're unsure if it is or is not a business related expense, there are 4 words that the IRS really likes, and that is ordinary, necessary, helpful, and appropriate. So when you're spending $1, if it's ordinary, necessary, helpful, or appropriate for you to generate income, track it as an expense. Your phone bill, your internet, your power, portions of your rent or your mortgage for those of you that have a designated home office, all your mileage, your travel expenses, all of those are direct business related expenses. So make sure to track them. Okay. Now I'm going to go over, I've got 3 higher level strategies just to take into consideration. All 3 of these are ones that you could look at implementing before the end of the year as well. So I kind of cherry picked these ones to share them with you. The first one is a health savings account. So if you are paying for your own insurance, you have a high deductible plan, contact your insurance provider and ask them if you qualify for a health savings account. Okay, if you're single, you can put up to $4,300. If you're married, you can put up to $8,550. But what's really cool about this, so I'll use myself as the example. This year, I'll put $8,500 into my HSA. It's a deductible expense against my business income. I can then invest those dollars and they can grow tax-free. And if I have a medical related expense, having a baby, prescriptions, copays, you can pull those dollars without a tax penalty. So it works like a savings account that you can invest and use the tax deductibility and give yourself a good, easy deduction before the end of the year as well. So really cool stuff there. Clayton, I've heard that any water, food, etc. that you are using can be used towards tax. I heard this while I was in landscaping. I'm not sure if this has any truth, but it's a good question. There is truth to it, but a lot of what you need to do is just make sure to document it. So anything that you're doing that ties directly to your business, The general rule of thumb is if you are having lunch by yourself, a lot of times that doesn't become a deductible expense unless you're traveling. However, door to door, having a separate office building, having separation from your house, those can absolutely become deductible expenses. And Clayton, taking it a step further, I write off a portion of all my utilities at my house. I write off a home office. I write off my pest control services. I write off my landscaping services. Because if any of you were to come over to my house, I can't have what is in front of my home office look crazy, and I'm not doing my own landscaping. So portions of that all tie together to become a deductible expense as well. If you are a door-to-door, door-to-door is not just ever. There's a lot of work. Door-to-door sales rep. Do I have an LLC? Can I get it? Can I get business expenses? Absolutely. You're 1099. So make sure that you have the business entity. Here's what's cool about this. I believe, and this is a very biased opinion, so brace yourself. I think everyone should be self-employed to some extent, whether it's a side hustle, side business, or full-time self-employment. There's no tax code that says you have to be a great business owner. There is tax code that says that as long as you show the intent, you can take business-related deductions. So when you have the LLC, you can write off startup expenses, organizational expenses, set up that LLC, track your expenses, and it will absolutely lower that tax liability if you're 1099. Good question, Orlando. All right. Any of you with kids? If you got kids that are under 17 and a half, what can you do to put them to work? I'll use myself as the example again here. I got two little girls. I got a 4-year-old and a 2-year-old. Both of my girls are models. They look like their mom, lucky for them. They look like me. They wouldn't be models. I get it. But both of my girls, whether they have a photo shoot, they're on my website. I use them for likeliness, for marketing. Last I checked, models make money. So my business pays my girls for a modeling contract. Each of them this year will make $15,500 each. I get the deduction as a business owner. They didn't make enough money to file a tax return. So now, as a parent, I get to teach them financial literacy. I can invest those dollars into retirement or life insurance accounts. They can use it as they get older to either go to college, buy a house, or if I do what I intend, for them to start a business. That's the goal. So it doesn't have to be the full amount. It could be $500, $1,000, but what can they help you with? Marketing, social media management, cleaning up the office. Great one for those of you that do have kids that are under 17 and a half. Last one from a tax strategy standpoint, that this one is amazing for door-to-door specifically. It's amazing for any self-employment really, but door-to-door, there's some really good use cases. If any of you are golfers or golf fans, every year, the Masters Golf Tournament is held in Augusta, Georgia. And back in the 1970s, this guy got audited for renting out his house and leaving, and he ended up getting this passed through the IRS. It is actually Section 280A of the tax code. It's referenced as the Augusta rule. But you can utilize this anywhere in the US. It doesn't have to be in Georgia. I get asked that all the time. What this rule says is you can rent your house out up to 14 days a year tax-free. Okay, this year, this will give me a $42,000 write-off. So a lot of the way that you can implement this, if you're recruiting and having people over to your house, if on the 5th of every month, you're going over your minutes, your meetings, your bookkeeping, your monthly goals, your quarterly goals, your annual goals, instead of renting out a Marriott conference room, you repurpose those dollars, rental agreement, transfer the money from your business account to your personal account, rent your house out. It's a deduction against your business income. You do not have to claim the income on the personal side. So it's an awesome strategy. Yes, you have to put some thought into it. Yes, you need some documentation. These are all things that we can help you with if you feel like you need help. But as I say this, like I even feel like I made that sound more complicated than I should have. All it is a tax code. And if you can have someone that can help you implement it into your business, this is a great one that we help thousands of clients with a year that saves an average of $10,000 to $20,000 a year on something that you are going to do anyways. You're going to use your house for recruiting or bookkeeping. We just need to formalize it and give yourself an awesome deductible expense. Cool. Any questions so far? Anything that you'd like to add on here either, Jessica? Anything you want
No,
to jump in on? Are we good?
I think this is all awesome. This is something that I implemented in my life just a year ago, you guys, and my children are also employees, and this is all of this I am utilizing. So love hearing it, and just know that you can do it too. I know it feels intimidating. I was there. And so it's not intimidating when you've got the right help and you learn these things. So just takes the knowledge.
For sure. Yeah, well said. This is the savings on the bookkeeping side. Asset protection is obviously important. I mean, one of the things that I like to say is, so if I had our attorneys on here giving this presentation, they'd talk to you about asset protection for like 45 minutes. I'm going to try and spend like 45 seconds. It is a sue happy world that we're living in. And I think one of the things that becomes important and something to keep in mind is your personal's personal and your business is business. The more that you can separate the two, the better. As you diversify and as you have multiple streams of income, don't put all your eggs in one basket. Okay, those of you that are door to door, making really good 1099 income, and maybe you purchase a rental property, why put those in the same business entity? Separate them out so that you can give yourself a true profit and loss, give yourself the liability protection, and separate it directly from your personal and your business. Okay. What are your best tips for tracking deductions for guys just getting started in a 1099 roll? Excel sheets, apps like Stride. There's a really cool, so something like QuickBooks is great. If you don't want to commit to QuickBooks, Stride is awesome. There's another one called Keeper Tax, K-E-E here. I'll type it in the, oh, I don't know if I can type it in the chat actually. Keeper, Keeper. I think it's like $150 for the year, but you can link together all of your credit cards and all of your bank accounts, and it'll text you at the end of the day. So it'll text you and it'll be like, Jessica, you had 15 transactions today. Which ones are business related? And you just text back 2, 3, 5, 7, and it tracks it for you directly in the app. But QuickBooks, one designated credit card for business related expenses, or some sort of an app would absolutely be my recommendation. For those of you that drive a lot, you can get Mile IQ. So if you have vehicles, there's 3 major ways that you could write off your vehicle. Number one is Section 179 of the tax code. If your vehicle is primarily for work and it's over 6,000 pounds, so that's your Range Rovers, Escalades, trucks, G-Wagons. These are the ones that YouTube University tells you to do nonstop. There are ways that you can depreciate those vehicles in the first year, which is great. That's the one that I usually utilize. You can also itemize them. So you're writing off your oil changes, your gas, your car washes. And then another very common one, and the one that I would probably recommend for door to door, is tracking your mileage. So Mile IQ or QuickBooks has a mile tracker in it. Those are great apps to track your mileage and utilize writing off that mileage deduction for those of you that drive quite a bit as well. Okay. I know it's super popular now, like door to door, having a Tesla. You don't have all these fuel expenses and all these additional things that you used to, but you still can take that mileage deduction and it really adds up quite a bit. It's about 60 cents a mile that you're able to write off. What if it's also your personal vehicle? Then you write off a percentage of it. So it's 50% business, 50% personal. You'd either go the mileage route or you would take the percentage. So an example, a couple years ago, I bought a vehicle that was over 6,000 pounds. 80% of it was work related. Most of what I do is work related, 20% personal, and I split it up that way. So that's one that you'll want to make sure you're on the same page with your accountant. But Clayton, thank you for asking that. A little bit of tracking goes a long ways in understanding how you can write off those vehicles. Okay. I got a couple more slides and then I want to open it up for any other Q&A as well. Personal and business credit. Do you have to build business credit? No. What are the major differences between personal and business credit? What are the benefits? How long does it take? All of you have a legal name, a social security number, and a personal FICO credit score that ranges from 300 to 850, right? You turn 18 and you get your first credit card, car loan, student loan. They start judging you off that credit history right off the bat, right? Here is what is really cool about door-to-door. You are generating income, you are 1099, and you have an LLC, you have an EIN. You can also apply for and build what's called a paydex score. The paydex score is a credit profile for your business. Okay, it ranges from 1 to 100, and 80 to 85 on that scale is like you having a 750 to an 800 credit score. So if you build up your credit profile down the road, I've never met an entrepreneur that says, I wish I had less money. Okay. That's yet to happen. So building business credit isn't because you just need money. It separates your liabilities between your personal and your business. It opens up additional funding opportunities to take advantage of opportunities moving forward, but it's a great way to also organize your tax situation, okay? All of my business lines of credit are way larger than my personal lines of credit, and the interest rates are oftentimes much lower. Why? Because it costs more money to run my business than it does my life. So if you can build business credit, use business credit, let the business pay for itself, and then pay yourself from there. 5 years down the road, if you want to, I'll tell you a personal story on how I've used this. So about 3 or 4 years ago, my cousin lives in a really small town in Missouri, and his daughter was having some health issues. He ended up getting let go as a police officer in Missouri. So he's kind of freaking out a little bit. I understand I need tax benefits. So I bought 12 properties in Missouri and am still paying him on a weekly basis to manage all of those properties. One of the properties that I purchased was 8 acres and had mobile homes on it. I say mobile home. They look more like meth labs, if I'm being honest, but they say mobile home. So it is what it is. But at the time, if I ended up purchasing these, I would have been looking at 8% on an investment loan to purchase this property. I had built a business line of credit and had a 4% business line of credit that I used instead of taking out a traditional loan. So now I get more cash flow. I thought I would have refinanced by now, but I haven't. So I don't know what you'll use business credit for, whether it's marketing, whether it's investing. But like I said earlier, it's not something you have to do. It's not something that just happens because you set up a business. You have to apply for it. You have to maintain it. You have to build it. But having additional funding opportunities is very rarely a detriment for business owners. So really, really cool stuff that you can do that way as well. Another cool success story. This one's pretty awesome. All of you being 1099, you'll appreciate this. Like 8 or 9 years ago, we had a client that we helped build business credit, and we build up the business credit. And then he went and bought those really cool, like Sprinter vans. They're like the Amazon box trucks. He ended up remodeling the whole thing using business credit to turn it into a camper van, sold it, made like 20 grand, did it again. ended up on Shark Tank. And it is a multi-million-dollar business to this day off of some work ethic, a really cool idea, and business credit. So kind of cool stuff there. Last but not least, and then I'll make sure I leave plenty of time for questions here. It's not about where you are right now. It's where you're going to be in 1 year, 5 year, 10 year, and beyond. Okay. All of you should have an estate plan in place. If you don't have one, it doesn't mean you need one tomorrow. But put it on the to-do list for when you make your next 500 grand, when you buy your first property. I don't know, whenever you decide. I don't care when you do it, but get an estate plan at some point. Trust, will, living will, power of attorney, protect what it is that you're working hard for. When you set up a business entity, the 3 things that I tell people to take into consideration. Number 1, feel free to write these down as well. If you don't have an LLC, or if you have one and you're wondering if it's set up properly, write these down and ask yourself these questions. Number 1 is privacy and protection. How much privacy do you want? How much protection do you need? That will change as you build your net worth. Okay. Number 2 is tax benefits, profit or loss. Okay. Good or bad, profit or loss, when you're making investments or generating income, how can you make sure you have the best entity to maximize your situation? Number 3 is credibility. Okay. Show yourself as a legitimate business, not only to your clientele, but also to banks and lenders. Okay, banks are businesses. They make money off your money. That is their business. But if you make sure that you have your business name, your EIN, a professional email, the more legitimate that you can show yourself as a business owner, the easier it is to obtain funding as you build business credit long-term as well. Okay. And then the last thing is just separating out your different businesses and different types of income. If you're knocking door to door and generating a significant amount of active income, you're taxed at the highest rate, 10 to 37%. That's where I want you to be able to write off your phone, your internet, your power, the Augusta rule, paying your kids. But then you go generate a bunch of money and you purchase a rental property. Separate it out so that you have the separate liabilities. But then what you're doing is you're generating passive income that's taxed between 0 and 20%. So now you can run cost seg studies, you can accelerate depreciation. And if you have them separated and you have that rental property, the liability is separate, but it'll still flow through to write off on one return. So the reason that I own so much real estate is I can show a ridiculous loss, write it off against my personal income for being self-employed, lower what it is that I have to pay in taxes, and it doesn't hurt what it is that I qualify for when I'm buying a house or when I'm buying a car or anything else along those lines. Okay. That's kind of the catch-22 of being self-employed. If you have a W-2 job making 100 grand a year, you walk into a loan officer and they're like, yeah, just go pick any house in the valley. Congratulations on a job. You go make 250 grand 1099 and they're like, this seems risky. Have you done it for 2 years? Do you have your tax returns? It's so stupid. Don't get me started. But anyways, when you're purchasing things that are depreciating against your income, like vehicles and homes, it doesn't affect your ability to qualify when you're self-employed. So understand, you tell I get heated about this. I can't stand, I think it's so ridiculous. Like, people can make twice as much money self-employed and lenders are like, oh no, what are we going to do? You made what you made 2 years, W-2. Anyways, making sure that you have tracking, organization, separating your personal and your business. That is what we are in the business of. That's what we want to be able to help you with. As Jessica and I talked, and she's texting me, working and doing it all until what was it, 11 o'clock last night. we're like, all right, let's figure, sorry for the late text. I'm like, I get it. No big deal. What I did though, is we made this last night at 11 o'clock. I will put this link in here. Jessica, I think you might have to share it. I think it's only going to you, but any of you that want to understand more about your situation, ask about how you're set up, ask about things that you're potentially missing. As a business, we help with entity formation, business credit development, tax prep, tax filing, bookkeeping, estate planning. We have a really, really cool service that we recently launched about 3 months ago as well. It is so much cooler than I thought it was going to be. So what it is you upload, we call it the decoder. And what the decoder does is you upload your 2024 tax return, and AI pulls out every box of your return. And whether you're married, you have kids, you have multiple businesses, W-2, whatever it may be, it gives 10 to 20 different tax strategies that you could be implementing that you currently are not, and saves you anywhere from $10,000 to we've seen as much as $200,000 in tax savings. So whether you want to make sure your entities are set up the right way, you want tax strategy, or you need an accountant that's familiar with self-employment, that is for a free consultation to talk to us. All of you are door to door. Our services cost money. So if you want to buy something, feel free. I guess that's the catch. But the goal with this is to bring you value. Hopefully this is helpful. If we can earn your business by saving you a ton of money in taxes and giving you asset protection, that's ultimately the goal. I'd rather just say that to a bunch of sales guys than make it feel like there's a bait and switch. So, Jessica, anything that I'm missing or anything else you want me to cover?
Oh, I think that was excellent. Tommy, one of the questions that I get pretty frequently from door-to-door sales reps is how do they know how much they should set aside for taxes? So if they should be pulling money out and setting it in a separate account so that at the end of the year when they, however much they're going, is there a rule of thumb they can go by of how much they should set aside?
Yep, great question. So there's a book about this for anyone that's interested in listening to an audiobook. It's called Profit First by Mike Michaelwitz. And he really preaches 7 different accounts. I think it's a bit overkill. A general rule of thumb is 20 to 30%. Now, what I can tell you, the better thing to do is tracking your expenses. And if you make $100,000 and you have $30,000 of expenses, you've got $70,000 that you're looking at paying taxes on. So how much do you pay on $70,000 of taxes? You've got your federal tax and your state tax. So if you're in California, New York, Massachusetts, you're paying a lot more than someone else, right? So 20 to 30% is a good rule of thumb. But if you can strategically know what your profit and loss is, I would way rather you invest those dollars into your future and generating passive income. And people are so surprised how often it makes more sense for them to buy a rental property than pay that large dollar amount in taxes. Buy a new vehicle as opposed. So without strategizing 20 to 30%, I think it's a good rule of thumb no matter what. But please invest into yourself. Yes. I prefer money in entrepreneurs' pockets than the IRS.
For sure. I just had another question. I get this one a lot. If they are a 1099 sales rep and they have not set up their LLC, they're just being paid through their social security number, they don't have an LLC set up, at what point can they set that up? Can you backdate it? Can you not? Is it just moving forward for your taxes? What does that look like?
Great question. The sooner the better, because that way you're showing a reasonable start date. However, if you've been knocking all year, you can still set this up before the end of the year, assuming that your accountant and your CPA are okay with it. But you should be able to utilize the entire calendar year, whether it's an LLC taxed as an S Corp, or an S Corporation. The reason that, I mean, what very biased opinion again, brace yourself here. I think that like I'm so grateful that when I turned 18 and I drove to North Carolina to knock door to door, they required that I set up an LLC and opened a bank account. I am so grateful that that was the case because then I had a proven history of having a self-employed entity so that 2 years, 5 years, 10 years down the road, I was able to build larger lines of credit. I was able to utilize the tax code. It showed better when I qualified for a house. So the sooner the better, but as long as it's within that calendar year, there can still benefit from that as well.
Okay, that's perfect. We had one more question. Let's see how much of this applies all in Canada. What do you know about that, Tommy?
Great question. I know enough to be dangerous. We don't do any business in Canada. I've got some partners out of Canada that I can absolutely refer you to. It's pretty similar. It is way more favorable in the US from a tax perspective. And what I mean by that is the US favors entrepreneurship and business ownership much more than Canada does. So in Canada, depending on where you're located, you'll either want to talk to your accountant about having a sole trader or a limited corporation. So a lot of fundamental similarities, but less benefit. And I hate to say that, I'm sorry, but that's the case. You still can take business related deductions. The major difference between Canada and the US, in the US, we help a lot of business owners that didn't even generate any income take deductions from a tax standpoint. In Canada, you do have to be generating income to utilize business related deductions. So a lot of what I talked about today, there is not an equivalent of like the Augusta rule, for instance, but you can still take ordinary and necessary expenses to lower your taxable income. Those are all things that do apply. So a lot of similarities for sure.
Awesome. Guys, any other questions in the chat? Throw them in before we wrap up. I will watch for those. Tommy, the last thing I guess if you'll leave us with is what is the most important thing that they can do today to move towards their goals financially?
The number one thing is track your expenses. It really, really is. Like if whether you're downloading QuickBooks or you go get Keeper Tax or you go get an app, like please take that serious because if you do that right now and you go through, it's going to take you a couple hours for sure. Set aside some time on a Sunday, set aside some time throughout the week, or sit down and knock it out in 2 or 3 hours. But if you go through all of your expenses and you classify what it is for a business related expense, you're going to be shocked how much money you've spent, or you're going to see how much money you have left over. Once you do that, look at how much you're going to be looking at paying in taxes, and then go create a game plan. Put a strategy together. Can you invest into real estate? Can you put money into retirement accounts? Can you implement more tax strategies that are going to create more of a tax benefit to create cash flow for yourself in the future? This stuff doesn't happen overnight, but if you implement one new tax strategy this year, I am proud of you for bettering yourself because the first time you write off a home office, you have a home office forever. The first time you write off the Augusta rule, pay your kids, you do those things, it becomes part of who you are as a business owner. So track your expenses and find 1 to 3 tax strategies that are new that you can implement that become part of who you are as a business owner.
And Tommy, we can't thank you and everyone over at Prime Corporate Services enough. We're grateful for your knowledge and for giving that to us and educating all of us. So I appreciate you.
Thank you for having me. It's great seeing you again, and reach out if there's anything we can do to help.